Hi sweetie, and welcome to Gold Talk with Goldie. Come on in. I'm going to chat to you today about our fave orange man's love of gold.
Donald Trump loves gold, big time. I am Trump finger guy.
But you will also find today, President Goldfinger loves more than just gold.
Donald Trump loves Bitcoin.
Trump revalues gold? The book value price of gold held by the U.S.Treasury is fixed by law at $42.22 per fine troy ounce. Was established by Congress 1973 per current Treasury ledger. So what could happen? First, short-run hero for 2+ years until inflation kicks in. Second, long-run pain and DNC gets blame in 2029? Hyperinflation, inflation, BTC revalue, and excellent politics plus macroeconomic news equals a Super Trump?
Super Trump!
If Donald Trump revalues the official U.S. statutory price of gold to $5,000 or $10,000, the market price of gold would skyrocket toward or past those figures, dragging silver up with it in a massive inflationary rally. Revaluing the U.S. book value of gold is a theoretical maneuver to instantly wipe out trillions of dollars of national debt by printing new dollars backed by the revalued gold. 1. Revaluing gold to $5,000 per ounce. A statutory revaluation to $5,000 would act as a massive, intentional devaluation of the U.S. dollar. Gold market price action: the physical spot price of gold would immediately surge to at least $5,000 per ounce. Because the U.S. government holds roughly 261.5 million ounces of gold, tracked via U.S.Treasury fiscal data, revaluing it to $5,000 would instantly expand the U.S. gold reserves book value from $11 billion to roughly $1.3 trillion. Silver market price action: silver would rally aggressively due to its historical monetary correlation with gold. With a standard gold-to-silver ratio during bull markets tightening to roughly 50-1 or 40-1, silver would likely surge to $100 to $125 per ounce. Economic impact: the sudden injection of trillions of newly minted dollars onto the Federal Reserve's balance sheet would trigger intense fears of hyperinflation, causing a massive flight out of fiat currency and into physical precious metals. 2. Revaluing gold to $10,000 per ounce. A statutory revaluation to $10,000 would be an extreme monetary shock, representing a complete structural reset of the global financial system. Gold market price action: physical gold would explode past $10,000 per ounce almost overnight. At $10,000, the U.S. gold reserves accounting value leaps to roughly $2.6 trillion, giving the government an unprecedented pool of newly engineered liquidity. Silver market price action: silver would experience an historic squeeze. Driven by intense industrial demand combined with global panic buying of hard assets, silver could easily breach $200 to $250 per ounce. Economic impact: a $10,000 revaluation signals to global markets that the U.S. dollar has been heavily diluted to inflate away national debt. Central banks would aggressively dump U.S. treasuries to buy tangible assets, causing global supply chains and fiat-based financial systems to fracture. The mechanics: how this works. Action step: operational mechanism, financial consequences. 1. Executive/legislative revaluation. Treasury changes the statutory book price from $42.22 to $5,000 or $10,000. Instantly inflates the paper value of U.S. gold reserves. 2. Certificate issuance. Treasury issues new gold certificates to the Federal Reserve. The Fed credits the Treasury's general account with new cash. 3. Debt monetization. Treasury uses this newly created cash to buy back or cancel national debt. Trillions of dollars are injected into the economy without taxation. 4. Currency devaluation. The purchasing power of the U.S. dollar plummets globally. Commodities, real estate, gold, and silver prices explode upward. Crucial blind spots to consider. Legal hurdles: by law, the official price of gold is set by Congress under the Gold Reserve Act. An executive order by a president to revalue gold would immediately face intense constitutional and legal challenges in federal courts. Gold-to-silver ratio volatility: while silver always tracks gold during monetary crises, its gains are often more volatile. Silver is heavily used in industrial applications, meaning a global economic shock from a gold revaluation could initially disrupt industrial silver demand before its monetary safety demand takes over. Politics of current Congress. A Republican-controlled or pressured Congress could absolutely buckle and pass legislation to legally revalue gold and establish a Bitcoin reserve, because the short-term political payoff of erasing national debt is incredibly seductive. Politicians are highly incentivized by short-term gains that last through election cycles. If the administration presents a plan to wipe out $3 trillion to $5 trillion in national debt overnight using gold and Bitcoin, Congress could view it as a historic win to fund tax cuts or spending without raising taxes. The severe inflationary consequences would take 12 to 24 months to fully hit the consumer economy, conveniently pushing the crisis past the end of the presidential term. An official pivot to a dual $10,000 gold revaluation and a strategic Bitcoin reserve would trigger the most violent, fear of missing out, FOMO, driven precious metals rally in human history. What a $10,000 gold plus Bitcoin reset does to market prices. If Congress legalizes this plan, the traditional financial system would suffer a massive loss of confidence. Institutional and retail money would panic stream into hard assets. Gold market price action. The price target, gold, would immediately blast past the statutory $10,000 per ounce floor. The FOMO driver. When the U.S. government declares that its paper dollar is officially worth 236 times less gold than it used to be under old accounting, $42.22 versus $10,000, global central banks and sovereign wealth funds will realize the dollar is being intentionally devalued. A global race to accumulate physical gold would ensue, driving the market price well above $10,000 due to severe physical shortages. Silver market price action, impact on your 2,500-ounce IRA. The price target, silver, would experience an historic, explosive squeeze, likely targeting $250 to $330 per ounce. The FOMO driver, retail investors who get priced out of $10,000 gold will pour directly into silver. Historically, during extreme monetary panics, the gold-to-silver ratio compresses rapidly. Silver strikes $333 plus. The Bitcoin factor. By adding Bitcoin to the strategic reserve alongside gold, the government signals that it is backing the dollar with scarce, unprintable digital and physical assets. This would send Bitcoin into the high six digits or low millions, creating a secondary wave of wealth that would inevitably spill over into physical precious metals as crypto investors look to lock their gains into tangible, private silver and gold. The operational sequence, how Congress and Treasury pull it off. To survive the initial 2 to 4 year window before brutal inflation hits, the government would likely execute the plan through a specific mechanical sequence. 1. Congress passes the Financial Reset Act. 2. Treasury prints $2.6 trillion in gold certificates and also buys BTC or Bitcoin. 3. Federal Reserve credits Treasury account with newly printed cash. 4. Treasury instantly buys back / retires trillions in U.S. debt. 5. Treasury may replace dollar with XRP and or XLM or stellar banking coins. Instead of reinventing the wheel with a new CBDC or central bank digital currency, using a proven and regulation-friendly coin for liquidity distribution might work better. There is also a giant reserve of XRP or Ripple coins that the reserve could purchase. 6. Result, short-term stock market boom and debt-free illusion, especially by melting in banker coins like XRP and XLM, with a strong base of BTC or Bitcoin. Win-win for the crypto world and inflation regulators.
I also like XRP and XLM. They are both fast like a hot Euro chick. Here, chicky, chicky, chicky.
Results? 12 to 24 months later, massive global inflation as currency supply explodes. Or the new XRP XLM BTC gold wall holds back inflation while allowing for rapid liquidity transfers? The world economy on a new quick silver greenback. Followed by 2. Spread and premium distortions. During a massive paper to physical decoupling, the actual physical premium to buy a silver coin could double or triple, while paper ETF prices might lag due to institutional manipulation or trading halts on Wall Street. Trump absolutely holds a powerful hand, and Congress has already begun moving to back him up legally on these exact strategies. Looking at the landscape right now, Trump has already bypassed initial gridlock by using executive action. In March 2025, he signed the executive order establishing the strategic Bitcoin reserve and a broader U.S. digital asset stockpile. Rather than fighting him, Capitol Hill is actively leaning into the plan.
Losers lose, and I win. Me smart.